8:24, just getting past 8:25 a.m. Central Time. You're down 1,100 points in the Dow. You were down over 1,000 already in the NASDAQ, 200 in the S&P. You took the metal markets down dramatically, at nearly $2 in the silver market. Gold market is down, bounced back, but it was down $70. Copper cracked down another 5 cents. It's back up 5 off the low, but it's still sharply lower. What the heck is going on? Well, the world has decided to reprice stock markets. When the Fed numbers, let me put it this way. When the Fed didn't cut interest rates at the end of July, and when the jobs report came out so poor, it spooked people. They're saying, let's forget all the good news. This market's rolled over. Okay, to a degree, we've slowed down. You're really saying then, if you believe that all the data before was wrong and that the other data that has been strong for the U.S. economy is actually a lie. That isn't the case at all. On the energy markets, well, if you're taking China, for example, that hasn't done anything to spur on its economy, and now the U.S. is rolling over to a degree, what does that mean for other economies? And what that means is probably lower energy prices. But you have rallied $1 off the low, believe it or not, in the crude. What does it mean for interest rates? Well, here, let me get to this way where I can talk to you about it. The 210 has de-inverted. So now, instead of the back end higher, or let me put it this way, this is the right way to say it. Instead of the front end so much higher than the back end, we're now getting to the point where it's getting more normal. And normal means the longer out you go, the higher you pay for an interest, and the nearbys will collapse more. And that is just what is going on. In the grain markets, as you know, I say this to you each and every week. You have to look when you go home on a Friday, what's the weather pattern going to be? And it is ideal. I don't know how else to say this. Farmers are probably now scratching their heads saying, how much storage space do I have? Do I have to get rid of last year's crop that I've been holding for higher prices? And the answer is, yeah, you probably have to do that. Or take the new crop in, but why would you do that? Take your old crop and you can store the new crop a lot safer, and that's what I think traders will do. So farmers are probably going to get some losses out of this. That's what I'm expecting. And in the currency market, it's a little bit of everything, but you're up 200 points in the yen. The Swissy is the other outperformer, and all the other currencies are basically down except the euro. So the euro and the Swissy up, other markets down, and we have here is a market that has gone into a state of a form of a mini panic early on in the day. That's the way to phrase it. When we look at the data this morning, we're going to get the S&P Global Group. They're coming out with their final July service at 8:45. ISM will come out with the new July service sector PMI at 9 o'clock. We had Austin Goolsbee, the Fed president of the Chicago Federal Reserve, on this morning, and he was very level-headed. He said, number one, you then have to say that all the data is bad. They tried to corner him and say, should the Fed make an emergency cut, as Jeremy Siegel of Wharton University, I don't know, my words are screwed up today, as he was saying this morning on CNBC, he thinks the Fed should move for a 75 basis point cut now, not wait for September, go now. I am not in that camp. He is looking at the stock market, and yes, if that happened, that would give you a short reprieve for the stock market, but the market needs to reprice itself. Nothing grows to the sky. Point in hand. We started off the year thinking that the S&P was going to be 5,200 at year end. Then when the market cleared it, it went to 5,400. When the market cleared that and got up to 56, then they were talking 6,000 by year end. How long ago was that? 2.5, 3 weeks ago, no more than that. Suddenly we're back to 51 and we're going into a full-fledged recession. The market's dramatically overpriced. The world's caving in. Well, number one, interest rates are coming down. Mortgages will probably get down quickly to around 6.4%. It's still not under 6, but as that approaches, the housing will come back. The jobs report that came out, I'm going to repeat, Hurricane Beryl has to be taken into account. And Hurricane Beryl took out 400,000 some odd people. How many of those are coming back now this month? I don't think it's as bad as you think, but I do think the markets got ahead of themselves, and I think this is the repricing event. We'll be talking about this and a heck of a lot more throughout the day in our different offers. Our futures trading kit covers a lot of that, but it's the market reports I write. It's the one that Linn and Associate puts out. It's our charting software. If you get our charting software, you also get to hear David Hightower of the Hightower Report talk, all our market analysts through there. If you take in the free offers, sampling of mine, you'll get to see my morning subscriber videos. You'll get to see my twice daily market reports. Take advantage of this, plus the free courses, a rune indicator, pivot points, and so on. You've got Epstein.com free offers. You can move your cursor to the top here. That is another way to get with it. You click on the blue when you get to the free offers, and then you'll get to the point where you put in your name and everything that you want in there, and then we send everything out to you. A lot of you are taking advantage of this. This is a really reasonable time to look at it. I'm Ira Epstein. You have yourself a good day. Give a click here or go to the free offers, and I'll catch up with you at the end of the trading day.